Hello everyone, thank you for joining me in today's weekly analysis webinar. This is Mohammed Yaoud and I'm the Chief Markets Analyst at PU Prime. Today is Monday the 18th of November 2024. We are very quickly moving into the end of this year. What an exciting start to the week we had during the Asian session. So let's have a look on the markets today, of course, and we will be discussing what are we expecting when it comes to the technical analysis, and also we will have a look on the economic agenda for today. Okay, so let's start today with welcoming every one of you. Thank you so much for being here today. And I know the last session or the last webinar was quite very short. We only discussed the technical analysis side of the markets, but today we're going to have a look also as well on the economic agenda. And to be honest with you, although the economic agenda is really important, but the geopolitical tensions weighing on the markets are equally as important as well, because by the beginning of today's session we have had this upward move on gold, and simply that was a risk off sentiment. I want to explain to you what's a risk off sentiment. So markets basically have one of two moods or sentiments, and sometimes it's somewhere in between, but that's the black and white of the markets. So markets can be in a mood of risk off sentiment. When we say risk off sentiment, this means that let's say risk is switched off. Think of it as a light bulb or something. So when risk is off in the markets, investors will be only seeking safe haven assets and investments. And that's why when we have heightened geopolitical tensions, when we have risk in the markets, people will usually stay away from risk. They will stay away from equities, indices, cryptocurrencies, and so on, and somehow they will go into the safe haven assets, of course, which includes gold. So today when we had this upward move on gold, it was basically a risk off sentiment, because yesterday we had this news coming from the US, especially from Joe Biden, that somehow he allowed Ukraine to use US weapons that can target the Russian let's say long-range missiles that could target Russia directly instead. Okay, so this basically increased the geopolitical risk, and that's why we had this upward move on gold during the Asian session. So that's the risk off sentiment. When it comes to the risk on sentiment, this actually happens or takes place when markets are calm somehow. We don't have any geopolitical risks. We don't have nothing to be aware of or afraid from. No Federal Reserve meetings soon, and so on. So that's when markets can take a little bit of risk, and we can see equities edging higher. So for example, during the last week when we had gold go down, indices and cryptocurrencies move higher, that was a definition, or the definition of the risk on sentiment. People wanted risk. People were happy that Donald Trump was the president-elect, and that's why we had those movements in the markets. So today, having told this, are we today going to see a risk off week where gold can continue moving higher again, indices probably go back? And by the way, because a lot of people ask about cryptocurrencies, are cryptocurrencies a safe haven asset or a risky asset? Basically, it's both. It can definitely do anything. So we don't really consider the cryptocurrencies as a risk off or a risk on sentiment instrument. Let's say it's not a safe haven, it's not a risky asset. It is a risky asset, but sometimes people will buy Bitcoin to hedge their positions in the US dollar, for example, and so on. Do you think the price of gold will continue to decline, judging from the 4-hour candle chart? Okay, we will discuss the technicals as soon as we are in the technical analysis part. Okay, gold or Bitcoin for safe haven? Of course it's gold. Gold is the #1 safe haven in the markets. As we say, Bitcoin sometimes acts as a safe haven and sometimes not. So you couldn't really say Bitcoin is a safe haven more than gold. So that's that. Okay, let's start by having a look on the economic agenda. And today is Monday, the 18th of November. So far, I see nothing of interest. So we only have the trade balance and the speech from Lane from the ECB. And shortly after 5 minutes, we will have the Guindos from the ECB speech as well. Housing starts on, no, there is nothing. ECB President Lagarde. So today, let's say we only will focus with the ECB comments. So we have Lane, we have the Guindos, and also we have the boss. We have President Christine Lagarde speaking today from the European Central Bank. It might affect the euro a little bit, not too much. I don't really expect to see fireworks in the markets, or at least on the euro today. Moving forward to Tuesday, 19th of November. Again, speeches from the ECB. We have Elderson. We have the Bank of England Governor Bailey, Andrew Bailey. And the CPI. CPI is important. That's the core CPI and the CPI from the Eurozone. And as per expectations, CPI is expected to go higher from 1.7 to a 2.0% on October. That's the headline CPI on a year-over-year basis. So we compare October of this year with October of the previous year. The CPI, the core CPI, is expected to come around the same levels. And, you know, this wouldn't really be showing on investing.com, but markets don't really focus right now on the CPI or the core CPI. So what's the CPI? It includes everything. It includes a basket of goods and services that we compare month over month or year over year to know, are prices going higher or lower, and by which percentage? So it's a basket of goods and services. That's the headline or the main CPI. If you exclude food and energy items, because they are volatile, they are so volatile, you will have the core CPI. The core CPI is basically part of the main CPI. It focuses on the main things in the economy, but we just exclude the volatile energy, food and energy prices, okay? But what we focus really on at the moment is the core CPI, which is the services CPI somehow, because the services CPI or inflation in the Eurozone is higher at the moment. So food, energy prices, anything else is moving lower, pretty much good, which is the goods services, the goods part of the CPI, but the services inflation is the one causing a little bit of problems at the moment for the Eurozone. So we will not be really focusing on the CPI or the core CPI, but we will be focusing on the core CPI, which is the services inflation. This is what's actually causing some trouble for the old CPI to go down. We also have the building permits and housing starts from the US economy and the core CPI from the Canadian economy. So yeah, maybe let's say Tuesday will be not a very high important day, or not a highly volatile day, but let's say we will have some movement in the markets, especially in the London session with the core CPI, and by the US session we will have the housing data and the core CPI as well, or the CPI from the Canadian economy. Moving forward to Wednesday, some trade balance from the Japanese economy, Public Bank of China loan prime rate, nothing really of interest so far to me. We have the CPI from the Britain or the British economy, and as well as, or in addition to the Eurozone CPI expected to move higher, the CPI in the British economy is also expected to move higher from 1.7 to a 2.2%. Again, this is not what we will be focusing on. Instead, we will need to focus on the services inflation alone. And this is only available, you know, through the full report, which is published. I mean, not only the headlines of what's the actual number for this month. However, you will need to access the full report. We have another speech for Christine Lagarde, crude oil inventories. This is important for this week, because during this week we are seeing some geopolitical tensions here and there, so it definitely might affect, you know, the inventories for the crude oils. And we have Bowman speaking from the FOMIC. Michelle Bowman, if you remember her, she was the only one during the last meeting not to join the main decision with the remaining members. So yeah, she's the outlier at the moment in the FOMIC, and her speech is really important. And we also have another speech by De Guindos. So far, Wednesday is another yet important, yet not highly important day. So far, on Thursday, we have the jobless insurance claims. And nothing else. Maybe the existing home sales from the US economy. So yeah, let's say that this week we have some important housing data coming out from the US economy. So we have the housing permits and starts on Tuesday, and on Thursday we have the existing home sales as well. Again, speeches, many speeches from the ECB. And we end the week on Friday, 22nd of November, with very important data from the British economy, which is the retail sales. Another speech by Christine Lagarde, another speech by De Guindos. So basically, De Guindos has a very tight schedule this week, and that's that. PMI numbers, S&P PMI numbers will be on Friday from the US economy. Don't really believe this will have so much impact on the markets. So yeah, I think it's time for technical analysis, and that's why we always love to take a lot of time in the technical analysis side. Please let me know in the comments if there is any financial asset you would like me to focus on before starting. So what I normally discuss is the US dollar, euro versus dollar, maybe the dollar yen, maybe gold, of course gold, maybe oil, maybe US indices. So I like to have a look, a little bit of look on everything in the markets, just to know where do we stand. What's happening here on the US dollar this week on the US dollar is quite very important, because the previous weekly candlestick, so this is, I'm starting with the weekly candle here, okay? Requesting for NASDAQ analysis. Yes, sir, I will do the NASDAQ, don't worry. So the previous week, we had actually the penetration of very serious resistance levels on the weekly time frame. So the 105.85 was a resistance here. The 106.11 was another resistance. And finally, the 106.55 was the third resistance. So you can see how many resistances or resistance levels we basically closed higher only by or during the previous week. So during this week, I'm not yet on the lower time frame. I'm just telling you what I expect on the weekly time frame. This is a huge candle on the weekly time frame, right? It's a 1.64% move. First, the weekly candle has to do something. First of all, the weekly candle has to start a move lower, okay, to retrace part of the previous week, so we can form the lower wick of the next bullish candle. So imagine if there is a bullish candle here, another one. Imagine there will be another bullish candle here, and the dollar during the week will go higher. Will it just be without a lower wick? Yeah, maybe. It can happen, but this is not normally what happens. What happens is that we might get, you know, it won't. We might get a lower wick, and then a higher wick, and this is something that we can see, right? If this is the next bullish candle. So first, during the week, I think we will be moving lower to form the lower wick in case the next candle is a bullish one. So by the beginning of this week, I'm basically bearish as per the weekly candle. But if this turns out to be a bearish candle, we will not be moving higher again to form, you know, a higher wick. So as per the weekly time frame, I'm expecting a pullback, either because we will end this week on a bearish candle, so it must be a pullback, or maybe we will be having, you know, just a lower wick before moving again higher. In both scenarios, I'm expecting a lower wick to form first. On the daily time frame, look at that. Although the previous week was pretty much very bullish, Friday closed on a bearish tone, right? So this is a bearish candle here. So this bearish candle shows that maybe this upward steam or upward momentum will not continue so much, and we will be moving lower. I'll just remove the resistance levels here. I'm just talking about the pure candlestick naked chart analysis. For me, I will be focusing on the previous candle. Why? Because if we move above the previous high, we are definitely moving higher, right? Because we will be forming a new higher high. Because this candle alone, I want you to focus on the high and low of this bearish candle. It's basically a lower high and a lower low. So if we are now forming a lower high and a lower low, we should continue in the same manner, right? Breaking above the previous high definitely means just a bullish scenario. And we'll just think about buying, but this is not the highly probable scenario for me. The probable scenario is that we will be breaking below the previous low, because we already have this bearish candle here. So we might see a lower high around here, which is the high for this candle, which would be lower than the previous high, and then we will be forming a lower low by breaking below the previous low. So again, the daily candle is bearish, or I mean, it gives me a bearish scenario, bearish bias, let's say, or bearish vibes. Okay, on the 8-hour time frame, it's just doing nothing. It's an upward move, doing nothing at the moment. And if you can see just on the momentum, we are losing momentum here. Although prices are moving in a sideways range, momentum is weakening. So everything on the US dollar at the moment gives me just a bearish bias. And on the 1-hour time frame, you can see how this is just moving in a sideways range. It's pretty much doing nothing. And on the short time frames, we're now seeing a bearish divergence. So from the 1 hour to the 4 hour to the daily to the weekly time frame, everything on this chart just tells me I'm waiting for a bearish move on the dollar index during this week. However, markets can do anything, right? We can 100% be wrong. So what will be the conditions for me to short this chart? It's pretty much simple. Break the last low, which is already outlined here. The 106.33. This is the last low. And you can see we have had a couple of rejections here. Not only this is a normal low, but this is the weekly, is it? Or the daily, sorry, the daily low. This is the daily candle low here. So I would like to see the dollar index during the week move below and break the 106.30. I will definitely short this back to the 105.75 and 105.50. Nothing else to be said here. So the dollar is bearish. I'm expecting a bearish move, but under only one condition, which is to break below the 106.30 to target the 105.75 and the 105.50. What happens if we don't really break below? We can do anything. Literally, this can be one of those very boring weeks where prices just move in a sideways range. And in this case, we won't just trade in a sideways range. It will become very, very boring. Or the other thing is, which can happen, because, if you have been, following this weekly analysis for some time, you know that I'm very humble when it comes to markets, and I know anything can literally happen. Just forget everything that we said. Markets can just do this. No words said, nothing else. It can definitely just do this. And if this happens, I'll not be happy, but I'll be happy to watch, because I will not be buying in an upward trend that has been showing bearish divergences for some time. That was a move higher. We saw a retracement, another move higher, and we are moving sideways. Yeah, it can continue higher, but I would like to see it to retrace before moving again higher. So that's my 2 cents on the dollar. I wouldn't really take so much time on the euro because it's simple. It is simple. On the weekly time frame we have, but of course on the opposite side. So on the weekly time frame we have broken some serious supports here. Okay, unless that on the euro we haven't really broken the last support, just a slight difference. And on the daily time frame, look at Friday. It's a bullish candle. Not only a green candle, but also a bullish one, because it's a higher high and a higher low. So pretty much everything that we have said on the dollar, but on the opposite side, on the 8-hour time frame, we are starting to see some signs of a sideways move. And on the 4-hour time frame, we are seeing some bullish divergence here. So prices are moving lower, momentum is moving higher. So everything on the euro chart says or tells me that I'm expecting a move higher. However, again, I'll be waiting to see this level to be broken first, 1.0590. Once we confirm a new higher high with a bullish divergence, with a break or a change of character, because if this happened here, it will be a change of character, right? Whenever this happens, I'll be looking to buy the euro versus the dollar. Maybe I'll have my first target around 1.0650. The second target, let's say 1.07. So it's a potential move of around 100 pips on the euro during the week. However, I will again wait for this level to be broken first. And on the dollar, this will be the level I'll be looking first to see that it got broken before actually pulling my trigger on any trades. I don't really like what I see on the dollar versus the Japanese yen. It's a move. Okay, see, this was a previous support, right? Markets were moving. We had a support, we continued moving higher. What normally should happen is, that was also another support. Focus on this one. What normally should happen is, when we break below support, we should retest and continue moving lower, right? That is the best scenario. What's happening here is not so good, because that was support. We broke lower. I just need to change this, I think, color, because it's not, yeah. So that was support. We broke lower. We went again to retest. We rejected and moved lower. However, we went higher again in the same candle, or 2 consecutive candles. So I don't really like what I see, because now what we are doing is we are moving in a sideways range around the previous key support. What I will always tell you is, don't trade rejections around supports or resistances, but you should trade the highs or lows formed around those supports or resistances. So in this case, we have support, prices are moving in a sideways range. My personal bias, just because I didn't like the dovish comments from the Bank of Japan during today's morning, they somehow said that we will not be raising interest rates unless we make sure everything in the economy is good. So the comments generally are dovish, which means that the Japanese yen might see some extra losses. So losses on the Japanese yen means that we will see a move up on the dollar versus the Japanese yen. So technically, I'm expecting a move higher to the 155.15. And of course, a move higher. Again, we will definitely target this order block here, or whatever you call it, supply or whatever it is. Yeah, this is some sort of a drop-based drop supply zone. If you work with demand and supply, if you work with an order block, so it's an order block, and that's that. So yeah, that's what I see on the dollar yen. I'm more biased higher, but I don't like it because on the dollar itself, I'm expecting a move lower. So for the dollar to move lower and the dollar yen to move higher, I would like to see so much weakness on the Japanese yen. I hope you get my point. And it's a risky trade, to be honest, because if I really believe that dollar will be moving lower, right? And for me to buy the dollar yen, it's risky. Unless I'm totally wrong with my analysis on the dollar index and the dollar index will just move higher. In this case, the dollar yen will be a good trade, because in this case, the dollar yen move will be aligning with, you know, whatever the dollar index will do. The yen might see some weakness if the dollar shows some strength. So this only will be a good trade. So I hope you get what I say about the dollar yen. I'm ready to target it, or maybe ready to trade it, but I don't like really what I see. Here, what happens on gold is that we edged higher by the beginning of the week, just because of the Asian session risk off sentiment. They are just, you know, buying the gold. And yeah, to be honest, I'm bullish. I'm a little bit bullish. So I would like to see. Okay, so currently what's happening is we are trading in a upward or an ascending price channel, right? Between the highs and lows. We moved back. Did we test this level or not? Slightly above this level. So this was a previous resistance. We broke above. We went back. I was waiting to see a test of this support, which is 25.77, but we didn't. We just, you know, or so far gold just, you know, tested the midline of the price channel. And of course, you know, the midline is really important, and you will see tons of price action around those levels. So far gold is seen, you know, to be moving higher. Asian session bought gold, right? By the beginning of London session, we saw some retracement. However, during today, if Asian or if the European session, London session, was able to clear London highs, Asian highs, I'm sorry, we are definitely going to target the 26.12, okay? And this is just what I personally believe will happen on gold. And let me have a look on the Nasdaq. I think someone requested the Nasdaq earlier. At the beginning of the session, the weekly candle is bearish. Everything about the Nasdaq is bearish. So we are moving higher, higher highs and higher lows, right? But the retracements here are overlapping in price territory. So that was the price territory for this first retracement. The other move wasn't really so much bigger, and again we had another retracement where the zones of the retracements overlapped. So that's a price, or that's a sign of price weakness. And we also have a bearish divergence here. That's on a weekly time frame. Again, the weekly candle, the previous weekly candle is bearish. It closed really bearish. The daily is bearish. So yeah, I'm bearish. I'm bearish Nasdaq. Will I sell? No, I wouldn't. I wouldn't really sell. Because, guys, let me just remind you of something. During Trump's first presidential term, anytime the Dow Jones or the Nasdaq or the S&P or whatever the US index is, whenever it gave us any technical reason or reasons to short the index, you know you will just get your stop loss hit no matter what. Don't talk about bearish divergences. Don't talk about bearish candles forming. Don't talk about anything. As long as Trump is in the office or near the office, this man just supports the stock market so much, and he's always willing to brag that the stock markets are on all-time highs and so on. So shorting stocks, usually shorting indices is risky. And in Trump's presidential term, it's much more riskier because this man just loves the stock market. So the Nasdaq, to be honest, I don't like it because I'm bearish. Or let's say if you want to be shorting the US index, just, reduce your risk. During the day, that was a brilliant move lower, right? If you want to short, you can short when we break below the 20,300 points. That will be a quick trade from 2,300 to at least 19, or let's say 20,000. I would be happy to take those 300 pips and go away, and I'll be having this with the lowest risk possible because it can just go higher, break the highs and continue moving higher without the shadow of a doubt. Okay, I think we're done here. Do you have any other questions? Is there anything else that you want me to discuss? Analysis, gold entry, buy, right? In order for you to buy gold, let's say it will have to clear the previous high first, the 25.92. 1 hour candle close above the 25.92 might be a good idea to buy, and the first target might be 26.05, might be. It really depends on the price action. How long have you been trading and how long did it take you to be consistently profitable? My friend, I've been doing this for 5 years, let's say, trading for 5 years. And it took me around 3 years or 3.5 years to be consistently profitable, let's say. And I'm not, consistently profitable is a wide term. Because what does it mean to be consistently profitable? Does it mean that you don't actually lose any money? No, of course I do lose. No one in this market can avoid losses. You will lose no matter what you do. Okay? But consistently profitable, it means that generally, over time, you are winning more than that you are losing. Again, how much time will it take anyone to judge anyone? Like, is it 1 week? Of course not, because there are weeks when I close, with losses. Depends on the market. There are months that I close with losses, but generally, over a 1 year span, I'll tell you, I might be closing, the year on profits. However, not crazy profits, because I'm not someone who actually wants, to be a billionaire out of trading, because I don't really believe this is something that you can do. You can make good money from trading if you follow some risk management tools and so on. But wanting to be a millionaire from trading, let's say, how much capital do you have? That's the limitation. If you want to start with 100 or 1,000 or 10,000 or even $100,000 US account, how much would you win? Will you want, 300 or 400% on a $100,000 account? It's not doable. If you do it once, you won't really do it again and again. So my approach to trading is slow returns over long periods of time. Compounding makes everything worth it. That's my whole point. I meant overall you're winning. Yeah, that's what I meant. I think this question aversion based on technical reasons. I'm not getting what you're saying, Mokgadi. Can you rephrase your question one more time? Okay, so I think we are good here. We have discussed technical side of markets. Yeah, something that you need to take care of during the week is definitely geopolitical tensions, because Joe Biden said something that we will be supporting Ukraine with US military and weapons that can target long range distances and so on. Putin, of course, will be responding with some sort of comment or some sort of a threat. So yeah, here and there comments will be going on during the week. Please make sure that you follow those. And my personal expectation, look at that. This is the VIX index, which is the volatility index, which is known as the fear in the markets. So it's edging higher. So somehow, after Trump was announced as the president-elect, markets were so happy, and we had some sort of calm tone and a risk-on sentiment in the markets. But at the moment, this might change a little bit, and we might see some risk-off sentiment. We might see some moves on the safe haven assets and declines on the risky assets. Please make sure that you keep your risks to the minimum. Thank you so much for watching this. I'll see you again next Monday. And please make sure that, again, you stick to your risk management tools and stop losses. Markets are not going anywhere, but your money might go to your broker. Thank you so much for watching this. I'll see you again next week. Please take care. Bye-bye.